All right, so I'm going to do more of like an investing 101 and talk about some real life stuff. I'm not going to do a lot of big fancy numbers. I want to talk about like realistic amounts that people can get into the space with. So for background, my name is Dan Fleischman. I was the youngest founder of a publicly traded company in history. I've angel invested in 29 companies since then. For those of you that weren't in the room earlier, I was the first one to install a Bitcoin ATM into a casino in America. I started getting really deep into the space at that time, but then really trying to get the public into the space in early 2017 when you saw a lot of the press start happening. My partner and I just kind of started the snowball effect of talking to a bunch of the publications about Ethereum back when it was at $19 and getting the people involved. And that's when I joined with Randall, Zach, Chase, and Ty. I've known Chase and the guys from the Crypto Watch for over a decade. But really in early 2017 is when the movement started happening because the world started to take notice. And when that happens, you have to make a decision as an investor. So this won't be Crypto 101, this will be more like Investing 101. I look at hundreds and hundreds of deals each month. And the way I look at crypto, each one is a different deal. And you have to decide whether you're looking at something that's a long-term play, a short-term play, or a gamble. A gamble meaning the coins that are below the top 50, really below the top 20 you're essentially gambling because their fundamentals aren't there yet, the funding isn't really there yet, their executives aren't fully staffed yet. Those are, I don't want to call them ideas because they're farther along than that, but those are more of a gamble the same way you look at your Fortune 500 companies, your Fortune 100 companies, your mid-sized companies, and then your startups. You have to determine for yourself what matters to you. If you have $10,000 to play with, does it matter to you if you make $800 in a year? Well, it should, because if you make 8% a year, you're beating the markets and you're a happy camper. But if that doesn't excite you, you have to make the next decision. What number does matter to you? You have to really think about that, because you can buy $10,000 or something, make $800. If you do that every single year, in theory, you're beating the markets, you're beating what any bank can offer you, and you're a smart investor that's doing well. In crypto, people have gotten this weird addiction or feeling that while I was talking the last 4 minutes, you could have bought for 10,000 and been up 2 grand or down 2 grand, just like that. That's scary to most people. And that's also why a lot of society isn't involved or invested into the crypto space yet, because it's just too volatile, being a 24-hour market. If in the time that I was talking the last 4 minutes, something can change that drastically. Think about that for a second. Going from 10,000 to 12,000 doesn't sound like a lot of money, but 20%, imagine if Facebook or Amazon or Apple changed by 20%. It wouldn't. It would be global news, like CNN would intercept our TV screen right now to talk about it, because it just wouldn't happen. 20% doesn't happen in real life, but in crypto it's strangely normal. And in 2017, people thought they had to make 50% every other day, or they were behind the other guy, because the other guy was making 100% every other day. So for yourself, you have to think about what matters to you, what scares you, and what would you do in those situations. Every single year, you hear the anniversary of some guy that bought 2 pizzas, and now it's worth $1 bajillion, right? But would it have actually been worth $1 bajillion? Because he probably would have sold 1 bajillion ago, not 2 bajillion ago. He wouldn't have hung on from Bitcoin being 10,000 Bitcoin or whatever the number was for 2 pizzas. He wouldn't have hung on all those years, because that's not how real life works. If you buy into something at pennies and it goes up to dollars, you've crushed it. If you buy into something at pennies and it goes up to tens of dollars, you should have sold at dollars because you already made 100 or 200 times your money. That's insanity. The crypto market is not supposed to be insanity. It's, luckily for us, we went through that in 2017. We won't have another 2017. You're not going to have another moment in time where Ethereum goes from $19 to $400 like that, and it's just normal, and people just think it's okay. Like when we bought in at $19, when it got to 100, I sold some because I was like, this is crazy. Why did it just go up 500% in a few months? When it got to 250, I sold some more. When it got to 500, I was like, okay, this is absurd. In between there, I bought back in because I saw moments in time. And some of those times that I was buying back in, if it was down to 330 and it would go back to 400, I was happy with that moment, even though I'm invested all the way back from 19. So let me talk about that. My $19 one, some of those, a big chunk of those, I'm holding for the long, long term. In between there, I'm happy with my singles. If you're playing baseball, for example, the $19 to hundreds of dollars is a grand slam. Those are very rare moments in time, and I'm taking a gamble on that, but along the way, I sold some to be safe. And I sold some to be safe so I could buy other coins in the market. I bought more Bitcoin. I bought, what's it called, EOS. And then I took my gamble on a coin that was only 0.4 of a cent called CIS coin. And that little coin was my little shot at glory. And I knew if one day it becomes worth 20 cents or 30 cents, hallelujah, that's fantastic. Well, it happened. And it shouldn't have. It went to 23 cents. And it's stupid. Because they weren't, well, I say it's stupid even though it benefited me, is because they weren't ready to be worth 23 cents. That makes them a $1 billion or $2 billion company. That's insanity for a bunch of kids working out of a dorm room in Boston. They're building something that's amazing. I love CIS coin. I'm excited for what they're doing years from now. Does that make sense? I bought into something that's my grand slam shot at glory. 2017 happened, and it made me realize that it at least has that ability to get back to 23 cents. The same way you look at Bitcoin, Ethereum, and some of these other coins, that you've seen them spike to a certain amount, you know that it has elasticity, I don't even want to try to say the word, to be able to get back to that amount at some point. And I think over the long term, a lot of those at some points will happen again because of supply and demand, because of people getting comfortable in the market, because of so many humans that haven't even got in yet. Think about it, if you walk into a restaurant right now, and there was 100 people in the restaurant, and you ask them to raise their hand if they own Bitcoin. Mathematically, less than one person in that room owns Bitcoin. Most of that room in America can afford Bitcoin. Now, if you start going to rural countries and third world countries, that number starts to change. But it becomes even more important for the people in third world countries because they are unbankable. So at some point, when the internet catches up, when technology catches up, when it becomes easier for people in those third world countries to be able to have Bitcoin or some coin on their phone in Venezuela or in Honduras or in some country like that, then over time, things will change for that overall market. What does that mean for you? It means for you is how much of the 10,000 do you want to be spending on your shot at glory? How much is it for your safety net, like your safe bets? And how much of it are you willing to have medium-sized risk? Me being a gambler, I like both. I'm excited to buy something for 10,000 and make 800. Like I'm like really excited. If I play a poker game and I'm sitting there and I buy in for 10 grand, I leave with 10,800, I'm happy because I like the victory, I like the game. That same game, if I go back next Wednesday, and I buy in for 10,000 and I make 102,000, I'm equally, like if you had like a little meter on my heart, I am equally as excited making 92,000 net profit as I am at 800 bucks. It sounds strange, but both of them have an emotional effect for me. I'm excited at the 800 because my poker skill game, I made money, I had a win. And now it makes me set up to feel better and more confident for the next time, and I learned experiences during that game. If I broke even, I would have been happy. When I invest in a cryptocurrency, I would be happy if I broke even for the next 2 years. Because every day I'm learning something. Every event I go to, I'm learning something. Every time I make a trade on Bittrex or Binance or all these other exchanges, I'm learning something that I'd never experienced before. And that's why I'm so aggressively trying to get people to get involved in crypto, not because I want them to buy their life savings with it. I want them to buy 20 bucks of it. I want them to taste it and feel it. I want people to get into the game just so that over time, as it becomes more readily available, the same way e-commerce became more readily available for us, people will feel more comfortable. I throw events like this where they're free. We threw 30 events in the last 5 years. In the last 2 years, they were cryptocurrency events. These things cost us hundreds of thousands of dollars. It cost me personally hundreds of thousands of dollars to throw events because there was no ticket price. I do those and have 1,000 people there and Randall's up there talking and flexing because That's going to help the snowball effect. So if I throw an event that costs $70,000 to throw for a night, or $250,000 like the last one, and there's no ticket price, it's honestly, for me, it's not charity. It's me wanting the community to grow over the course of time, because I think it's fascinating. I think this is fascinating. I think everybody being here is fascinating, because if we tried to have this exact event 3 years ago, I would have been talking to myself. Nobody would have been here. And I think the entire game is fascinating. So for you guys that are here, you have to think about why you're here. Is it because you want to invest into the space? Is it because you want to just buy half a Bitcoin and wait? Is it because you want to buy a bunch of coins and day trade? Or you want to pick one coin like Ty and trade your life away and make money? You have to think about what it is to you that matters. For me, there's all different aspects. I want short-term investing. I want the mid-risk ones, like Ethereum. And I want my long-term game to be something like Bitcoin. Now, the other interesting part is when you start thinking about some of the coins out there for you to choose from, because you have 1,700 options. Now you have 1,704. If we wait 10 more seconds, it'll be 1,705. Because there's a new coin happening every freaking minute. You have to determine, are you willing to gamble on one of those new startups and have your shot at glory? You saw people buying into like Dragon Chain and Wand Chain, and they're like, I made 6,000%, and then they didn't sell. So it's worth less than what they got in for, right? They didn't know what they wanted from the beginning. If I would have told them from the beginning, hey, if you put in $10,000 and it goes up to $30,000, would you sell it? Of course they would sell it. But I know people that put in $10,000 and they were up $1 million and didn't sell it. That's insanity. They didn't have a plan. They didn't know what they wanted. And then when this magic weird thing of 2017 happened, and they were all of a sudden a millionaire from 10 grand, they didn't know what to do. They didn't know how to act. They didn't know the tax implications. They didn't know who to call. They just didn't know what to do with their life. They didn't know how to get it off the exchange. Do I own this much? They didn't know anything about it because they just had a friend that said, buy Dragon Chain. So for you, you have to decide, are you looking to make thousands of percent in one shot? If you are, that's okay. But if you have a certain bankroll, you have to determine how much you're willing to risk. So here's the example. When you go to a casino, you're going to get to learn two things at the same time. The proper math is you're supposed to have 100 buy-ins of whatever you're going to gamble with if you're playing blackjack, craps, roulette, or poker. So if your net worth, your liquid net worth is $100,000, in theory, you're only supposed to play with X, $1,000 of buy-in if you have 100,000 liquid. That feels weird, right? Because if you had 100 grand, you wouldn't really want to go there and play with $1,000 because it's not that exciting if you turn $1,000 into 1,400, even though you made 40%, because you have 100 grand, so you don't feel it. But in proper math etiquette, that's the actual math. Now, what do most players do? The aggressive style is 40%, 40 buy-ins. So if you're going to go play in a casino and you have $40,000, sorry, you have $100,000, $2,500 is the buy-in when you're playing an aggressive style. What happens in most cases is, in most gamblers, which is going to relate to crypto, is most people do it with 10 buy-ins. Most people that have $100,000 liquid net worth go to Las Vegas and play with $10,000 or more. That is insanity, math-wise, because you're playing in a game that you literally can't win over time. If anybody has noticed, has anybody here been in Las Vegas? How many towers do the Palms have? 3. How many towers does Caesar's Palace have? 5. How many towers does the Venetian have? 3. How many towers does Wynn have? 2. It's called Encore, and he's building another $2 billion lake next door. You know why? Because nobody here can win. Nobody. Actually nobody, because it's just math. I'm a really good gambler, and theoretically I can't win in Vegas. But we still like to go in Vegas as Vegas. The crypto market is the same because you are gambling in something that is not stable yet. We don't have enough information. We don't have enough use cases. We don't have enough previous history to even fathom thinking that we're in a stable situation. The reason that a guy like Randall can analyze something that's been around for 20 years is because it's been around for 20 years. There's data, there's charts, it's gone through situations. If you look at Amazon stock or Facebook stock or Netflix stock, you can look at things over the course of time, and with actual intelligent information and a lot of people being able to tell you things, you can make decisions about when and why you should buy into those stocks. There's earnings reports. Has anybody seen the Bitcoin's earnings reports? Yeah, me neither. You just don't have the information. And so from a gambler's perspective, I still wouldn't risk everything, even though I'm a Bitcoin maximalist, even though I like Ethereum, even though I love Siacoin and I hope they're my shot at glory. Like, I still wouldn't risk it all. But what I want people to do is risk a little bit. And I think the safe number is in that 1 to 10% of their liquid net worth. 10% to me, honestly, is aggressive. If you believe in crypto space and you have 41,000 liquid and you're gambling with 4,100 bucks, it won't hurt if you're right or wrong. If you're wrong and you go down from 4,100 to 0, you still make your rent payment. The problem is when people have 10 grand and they put in 4,100, that's scary. Because now the mortgage is due, the car payment's due, etc. That's not just gambling, that's stupidity. And too many people are doing it, and too many people are losing and risking way too much. So my point is, if there's a comfortable number for you, that the downside is, let's say you have $41,000, let's say it's $4,100, that's you're willing to gamble with. If your 4,100 goes to 0, and you still make 6 grand a month from your job, you will not cry to me, you made me lose 4,100 bucks in the crypto markets 3 years ago. Because you're gambling 10% or less of your net worth and you have a job coming with income coming in. Now, if you have 41,000 and you risk 25 grand, you're going to come crying if Bitcoin goes to 0 somehow, which it can't. If it goes to 0 somehow, because you've lost too much of your net worth. So, if you take that 10%, that $4,100, now you have to determine what you want to do with it. Do you want to put all 4,100 onto one coin, like Bitcoin, Ethereum, EOS? Do you want to put that 4,100 bucks into a small coin and pray? You want to put 4,100 into an ICO and close your eyes and hope that it actually happens? The way you decide is not from listening to your friends that aren't invested into the space. It's not listening to your uncle that owns 3 restaurants. He's a business guy and he owns 3 restaurants, but it doesn't mean he understands cryptocurrency. And too many people are taking advice from people that just don't understand it because very few people truly understand it. But with the power of the internet, you can learn so much in real time. The way that the lady was talking about, she was watching CoinMarketCap every day and reading the news, that's you and it costs you nothing. Google is free. Most of the information is free. Most of the forums are free, the blogs are free, our Crypto Watch group is free. Just go on Facebook, type in the Crypto Watch, our group is free. And you've got thousands of people in there, 38,000 people that are just talking about things so you can learn for free and see and make a decision what you want to invest that 4,100 bucks into. Now, the strategy that I like to do is split it up. I like to take a portion and I like to buy into something safe. I call Bitcoin safe over the long term. Bitcoin will fluctuate over and over like we just talked about because it's a 24-hour market. But Bitcoin to me is safe over the long term because of the basic supply and demand that I talked about earlier. There's just not enough of them when you have 8 billion people and growing and a lot more money being made and a lot more technology and a lot more smartphones and a lot more internet, and Binance and all these exchanges are getting millions and millions of new users every month. Still, even during the bear market, we're still gaining millions of new accounts on Coinbase, Binance, etc. So the people are still coming, and there's only so much that they can buy from. And so for me, supply and demand kicks in a couple years. Next. Buying X amount, let's say out of your 100% of your 4,100, you have to decide how much is your gamble money, how much is your safe money, and how much is your mid-risk money. Normally what I like to recommend is 40, 40, 20. 40% goes into something safe, like Bitcoin or EOS. It goes into one of the coins that's really well funded. The reason I bring up EOS is because they just have billions of dollars in funding, that even if they screw up along the way, they're going to outperform it and they're not going to go away because they can afford to exist for the next 3 decades. because they just raised too much money. And it's a whole other story. So the other thing that we are not seeing with some of these companies, quick side note, a lot of these companies, unlike the startup space where we had the .com era, where all of a sudden pets.com and all these webvan.com went bankrupt really fast, is they didn't have anywhere near the amount of funding that these crypto companies have. These ICOs were raising $30 million as a startup. They were raising $222 million like for fun in 2 days. There's too many of these companies that, even though I don't technically believe in them, they're just not going to fade away because they have too much money, and they're so well funded that even if they were supposed to go broke a long time ago, like most startups would have, they just are going to keep existing because they raised $84 million on a Wednesday. There's too many of those coins that you see out on the market that just have too much money, which is a really rare, weird thing. Because from an investor standpoint, most of the time startups, they go through friends, family, and fool round, where their friends put in 50 grand, 100 grand, and that's how they get started. Then they have a Series A or pre-seed funding. Then they have a Series B, which is 5 million plus. Then they might have a Series C, which is 30 million plus. Every single company, every single ICO starts off at 30 million bucks. Why? It's completely unnecessary to have 30 million in funding pre-day one, but they did it. And so because of that, we have to be aware of the fact that the market can't go away over time because you have thousands of patents being put in by Morgan Stanley, Charles Schwab, Bank of America, Wells Fargo, et cetera. You have hundreds of thousands of jobs that were created because there was billions and billions of dollars thrown into the space. So the crypto market itself, it literally can't go away because of how much money is involved, how many people are involved, and how many large corporations that are very slow are involved. That was my little segue. So back to our 100%. So 40% is going into a coin that you feel comfortable with. The Bitcoin, Ethereum, Litecoin, EOS, your top 10, top 20 coins, you can have some type of safety that they're not just going to go away the next day. The next 40% is into your mid-risk ones. Your mid-risk ones, some of them line up the same with the safe ones, meaning your Ethereums, Litecoins, EOS, there's still volatility to them, and there's still a long-term play to them, so there's a medium-sized risk over the course of a year. And then your high-risk one is the penny coins, the $1 coins, the 54-cent coins. The coins that are $1 and less, really if they're $5 or less, they're still a gamble. But $1 or less, it's similar to if you look at the stock market, you have your really big companies, your Fortune 500 companies, you have your stocks that are $5 to $25. Then you have a bunch of the penny stocks that are 1 cent to $1, and some of them are $2, $3. Those are true gambles, and it's very, very similar in the crypto space. If you find something that is interesting to you and you believe in it and you have passion to it, out of your 4,100, your risk is 820 bucks. Now, if you take your 820 bucks and lose it, your downside is 820. You being in the space with 4,100, your downside is 4,100. But your upside is whatever you want it to be. Your upside is, if you're right, you can make 10,000, 20,000, 50,000, 100,000. But if you're wrong, you can only lose 4,100. It's similar if you go and play blackjack. If you go to blackjack and you have 4,100 bucks on you and no credit cards, no wiring information, no cell phone, you can only lose 4,100 bucks. There's nothing that the Wynn Casino can do to get more than 4,100 from you because you're not wearing jewelry, you don't have anything in your pockets, there's no cell phone. Your upside is if you win as much as you want. In theory, if you're just going to go there and win a bunch, you could win 5,000, 10,000, 50,000, etc. So that's an interesting gamble if you know when you're going to stop. The reason that Vegas wins over and over and over is nothing is enough for people. They buy it for 4,100 bucks. They have a good 20 minutes rolling the dice, and they're up $18,000. And what do? Increase their bets. Now what happens with math over time? It evens out. So the person that was betting 100 bucks on blackjack or craps or whatever game, now all of a sudden has 8,000 or 9,000 or 10,000 on the table, and they start betting 500 bucks and 1,000 bucks, and they win. Well, the math evens out. It's not about their playing skill. It's just that math evens out and they start to lose. But what happened different is when they lose, they're losing at a rate much higher because they're betting $500 to $1,000 a hand when they were originally betting 100. So when they were on their great run for those first 20 minutes at $100 a hand, when they lost, it's at $500 to $1,000 a hand. And the reason that players lose a lot of money in casinos is they normally do have money in their pocket. They do have a cell phone. There is an ATM. They can take a marker. And that's how people get into trouble. So that was my emotional speech on the cryptocurrency space. I'm going to open up to any questions, and then we'll dive into the next speaker.
Hi there, I'm Giancarlo, and I invest in crypto both with graphical analysis and long-term. But one thing I'm always really confused is when to start getting out, or at least at what point should I start getting, like, literally getting my money back and just leaving the free chips on the table, you know?
Sure.
Like, yeah.
So it's very similar to the blackjack theory. If you go there with $4,100, you have to determine what is your happiness level. And a lot of times people have that number that's their cutoff. They're like, okay, I put my $4,100 aside, I'm up $2,200. If I lose this, I'm quitting, I'm out, right? That has to be you in crypto. If you buy in for $4,100 and you're buying Ethereum and it goes from 231 to 312, well, you have to determine ahead of time what your happiness level is. Because if you don't, and you get to 312, you know what you say to yourself? I should have bought more. You know how many times people tell me that they should have bought more? Well, you didn't. Because the downside is, what happens in most cases, you were gambling, you would have lost it. And the upside is, I bought Ethereum at 19 bucks. My emotion hasn't changed. Could I have bought more? Sure, I didn't buy some huge ton. I bought enough that mattered financially, and then it went crazy. But I don't regret that moment ever, because I made a decision where in most cases I should have or would have lost money because I was gambling essentially. It was a strategic bet because the Ethereum Alliance happened the day before. That's why I timed it for March 3rd, 2017, because I saw what happened with the Ethereum Alliance the week before. I started researching everything, and then the day before, when they really announced it, I was like, well, if these 96 companies that are Fortune 500s are going to stick behind Ethereum and say they're going to use it, if it's good enough for their lawyers, it's good enough for me, right? So for you, if you say, okay, I'm going to invest in Ethereum or whatever that coin is, and it starts at 200 and it goes to 240 or 280 or 320, you have to determine ahead of time when you're willing to pull your chips off the table. When is the moment that's going to be happiness to you?
But this is the thing. How do you choose this X number? How can you just say like, oh, okay? Because for me, happiness level can be $1 million, but also if I get 10 million, I'm also very happy. So, yeah, happiness.
There's a macro answer to that, but there's a micro answer. It ties into what Ty was saying a little bit, but I love what Dan's saying about have a plan going into it. So, there are some very common patterns, whether it's like a bull flag or a bull pennant or a cup and handle or an inverse head and shoulders, and they're literally just, you can fat finger it. You don't have to get specific on it. It's basically like, hey, look, if I'm looking at a bull flag, the next move, if it follows, and it might not, hell, half the time they break down because Bitcoin goes on a run or something, but let's say you're looking at alt and it's got a bull flag, it's going to move the length of the flagpole from where it breaks out in that flag. And so you can literally chart that and say, I think if I'm going to get in as it consolidates in that flag or in that pennant, I think I'm going to get in here, and then, or if I already have my position, and oh look, it's up. You could take some profit there if you wanted, but let's say you did want to see if that pattern played out. Go ahead and just set a conditional sell. Say like if it goes above this point, kind of that breakout, and then it reaches this point, maybe the flagpole minus 10% because maybe it's not going to hit the top, but you want to kind of give a buffer in there, and then just let it sell. Like I can't tell you how many times I'll log into an exchange and be like all in Bitcoin and be like, what the hell happened? Like where's all my positions? Because I'll set those sells automatically just as to force my own discipline. And half the time, hell, I mean I nailed Ripple last year, but this last little run, I mean, I got out, like, I kind of like, 1.5 or 2, I had a position exit 1.5x and one at 2x, but I mean, the thing kept going, and I was perfectly happy with that. I was like, listen, anytime you find yourself going, I wonder if it'll go higher, that's your key to sell. Because maybe it does, maybe it doesn't, but if you're in profit, take it off the table. Like, I mean, it's just, I'd rather, take a 1.5x than roll the dice on a 2x and then end up the bottom dropping out. So you can take little, TA indicators, and I call it kind of just TA for dummies. I mean, that's what I use. Ty goes real deep into it and is very smart to do so. But I'll take, just general swags at it and kind of, I mean, I'll look on my phone half the time, and half the crap I'll put on Crypto Watch is like big fat finger, like, drawing to, I think this is gonna happen, and then I'll just go ahead and set a sell and forget it, and then I don't even worry about it until it hits that sell, and half the time the exchange does the work for me for my actively traded stuff.
So let me give you an example of happiness. If you made $1 million, you said you would be happy, but you would also be happy at 10 million. Let's talk about this side of it. Let's say you made $1 million and you're waiting to go to 10 million and it goes to 0. What's your sadness factor? It's forever. Like, you will remember losing that $1 million forever. But if I had like a little heart meter of you making $1 million and you making 10 million, I promise you it looks the same. It looks the same. And if you're in the game and you make $1 million, again, the number is irrelevant. It's 10,000, 100,000, $1 million. It's all relative. If you made $1 million, there's a lot of other things that you can do now that you have that, because now you can diversify and start doing, okay, I put 100,000 in real estate, I put 100,000 in the stock market, I put 300,000 away for a rainy day, I put 200,000 to a business, I put 300,000 back in the crypto space. Now what's the difference? Well, now you got 300,000 in the crypto space, but you've got a business, you've got all these things happening over here, you're in the stock market, you have a diversified life, because again, the number doesn't have to be $1 million, it could be 100K, 10K, whatever. But the difference is, if you get to $1 million waiting for 10, you are not just gambling, you're putting yourself in a position to lose everything. If you get to $1 million and you take a bunch of chips off the table and it goes to 0 or it goes up, no matter what, you were right. The reason for that is, too often it can go down, and if you lose it all, that's it. But if you take out the $1 million, or take out 500,000 of it, or 700,000, whatever math you like, and you start mixing it in with other things, whether that's real estate, stock market, or it's just other things in the crypto space, or investing into yourself, into a business, you're giving yourself a bunch of different outs, and crypto isn't going away. So if you now have only 30% of that $1 million in the crypto game, you're still in the game. And if it goes up from 300,000 to 3 million instead of 1 million to 10 million, are you going to cry? If your 300,000 goes to 3 million, but you had 700,000 over here, did you miss out on 10 million? Or did you make $3.7 million and have diversity? So I understand the feeling, the gambling. I'm a gambler. I want to win too. But when I go there with my 10 grand, I don't expect to make 100. Has it happened? Yeah, by accident, where it shouldn't have, because I was pulling money off the table anyways, and it was an anomaly. But when I go to Las Vegas with $10,000, I do not plan to make 100 grand. I go there with 10,000, hoping to make 2 to 10. I hope it pays for my trip, and I hope other stuff happens, and I hope I have a great time. And if I can make more, I make more, but I'm pulling money off the entire time. If I'm up even 2 or 3 grand, starting with my 10, the casino will never get me for 10 that weekend. It's not possible. My chips aren't in play. Once I've made that 2 or 3 grand, that's my new chips. So it makes people and my gambling friends mad at me, because when I'm playing blackjack and winning consistent, like Chase, this is exactly 2 weeks ago, I go with Chase to a fight, and he buys a piece of me, because I'm always the one that plays blackjack. He buys a piece of me, I win, and it's not even time to leave yet to the fight. I'm like, okay, let's go. He's like, wait, we only won, we won 64% in one shoe. Let's go. That's it. What else do you want? He's like, no, we still got 7 more minutes. I'm like, that's how the casino made that second tower. So you have to think about the fact that I went there with X, I won 64%. It paid for our entire trip, our flight, our hotels, our airplane, everything was paid for in one shoe. But within that 7 minutes, I would have lost it all. And the upside wasn't there for me. The upside is I make, instead of 64%, I make 94%. I don't care. Because if I would have lost it, I would be up here on the stage crying to you guys about, I was up 64% with Chase, and my story would have been so different when I could just book the win, have those chips in play, get player rating points from the casino, have a great story with him. Like, all the upside is there from 64%. That 94% doesn't make me any happier. It just doesn't. The story wouldn't be any better with an extra 30%.
I'll run over there too. While I'm running over, I do want to say, I remember what he's saying about buy-ins a lot too. One of the things we talk about in the especially in a bear market, if I tell somebody like I'm getting into this trade or this investment, I will only invest, if it's $100, I'll invest 50. I'll keep 50 as another buy-in because I just assume things are going to break down, are going to go down, especially in a bear market. So if you get into a position and you're not liquid enough to take advantage of that position, possibly going lower, especially in a bear market, you invested too much up front. It'd be like investing the whole, $100,000 instead of just $4,100. So always have liquidity. I call it my sea of red fund. When all the alts are down and they're taking a hit, if you don't have fiat to invest at that point, you have missed such an opportunity and you weren't tracking your buy-ins.
Okay, here's my burning question. Doing it as a couple. For example, usually you have your account, you have your strategy, it's simple. But if you have to do it together, obviously longer way, go together, we know that. Would you give up the losses? Like you take the losses as a learning? So I'll give you an example. We lost accounts, we burned through options where we could be mining instead of buying, and we chose to learn by mining. And the learning there for us was, hey, at least we have the rigs, right? So we're not, because we didn't know it was going to go to 400, who knew? If as a couple you learned that, that's one strategy. But longer term, would you like diversify as a couple? Kind of, you have your account, you have your strategies. If you're good at that, you can lose, take your 480 and, okay, babe, you can lose that, that's it.
You want to stay married? Yes.
Yeah, so the answer is you should, for sure. So if I gamble in front of my fiance, she cringes. She can't watch. Even when it's an amount that's irrelevant. I could lose a few $100s and it'll burn inside of her head for the next week just because she is risk averse. So if you're a couple, whoever the man, female, man, female, female, whatever combination, if the other person is risk averse, it's insanity for them to watch you gamble on Bitcoin, Ethereum, or anything else, or mining or anything. So to make them feel better, let them do something that's not as risk adverse. Let them do something with $100 and you're gambling with $500 or $1,000. They don't have to have the exact equal amount to be in the game, to be learning. But you do want to split up and divide and conquer and be learning things so you can come back home and pillow talk about your educated decisions.
But don't do it together, right? Because the risk profiles are different. So you keep then you're trading and you know the expertise of that, so you take those decisions, not put that into we're a couple, so we should be learning together, because that seems to be like a no-go strategy.
Correct, yes.
Yeah, okay,
Yes.
thanks.
Thanksgiving 2017, I sat with my brother, his son, my mom, grandparents, and uncle, and I bought all of them a little bit of Ethereum. Just a couple $100 each. I just wanted them. I split up $1,000 between 5 of them, and I just wanted them to all be in the game. So I made them. I said, look, if you open up your own Coinbase account, I'll help walk you through it, but you have to open up your own Coinbase account. And we did it over the course of a dinner, and I gave them all a couple $100 each, and I just wanted them in the game. Do you know how different the risk profile is from his son to himself, my brother, or to my mom? My nephew is day trading now and speaking on stages a year and a half later because he became an executive at one of the ICOs and obsessively learning the space inside out. He knows how to run bots and algorithms and and that started with me giving him $200 a year ago. But my mom still has that, and she hasn't logged in once. So you're going to have people that have different trading profiles, whether that's your spouse, your business partner, your friend. You want both parties to be learning about it, but you have to be aware of what makes them happy or scared or upset. Because if they invested $500 and you invested $500 and you both put it into the same account, even though it's joint money, for example, if their emotional level goes really, really scared or really, really mad or upset over the 20% it goes down or 20% it goes up, it'll change your perspective and you're going to make wrong decisions. If they start screaming, we're up 20%, let's sell it, and you were waiting until it's up 40% or 50% and you sell it, well, a couple things happened. One, you sold early when you thought you knew because you researched it and they didn't, so you missed out on the other 30%. Two, you're going to resent them for it because you studied and they didn't. And when you were right, boom, you resent them. Here's the other kicker. When you're wrong, they resent you. And they tell you, I told you so. The conflict that you can create from something that doesn't need to be tied in together is what you want to avoid.
Another question? One more?
Am I on? Okay. So full disclosure, I did receive my first Ethereum from Dan. And it is absolutely true. He showed me how to open a Coinbase account, and that whole thing was foreign. And looking back at all that time that I have spent studying, what is this market about, and how to invest and what to invest, there are 100% differences in our risk profiles. We do things differently. I do things differently than Dan. I do things differently than my brother, my son. We are very different people, have separate accounts. Because trading is emotional, I want you to address maybe the issue of cold storage and removing yourself from the accounts.
Yeah, it's very similar to what I said about not having the cash in your pocket outside of what you're willing to gamble. So what happens is people go into a casino or they go into a coin and they go in there with $1,000, and whether they're winning or losing, they make a decision that's emotional, like he was mentioning. And it's easy to have an emotional decision because money is emotional for most people. 99% of day traders in the stock market lose money. Let me repeat that. 99% of day traders lose money. If I asked this room, and there was 100 people in here, and 99 of you were in here, and the one person that actually made money is over there, how many of these 99 people would think that they made money that year? Most all of them. Do you know why? It's the exact same reason if you ask any poker player, who's the best poker player in the world, they're going to give you one answer and one answer only.
Dan.
No. I can tell you that because we tested it. We did it at the World Series of Poker 3 years ago. We asked the 6,000 people that were there, not all of them did the poll, but out of 6,000 people, a couple thousand did the poll. Do you believe you're going to win the World Series of Poker this year? You think it's a 6,001 shot if there's 6,000 people. And you'd think mathematically your people would say no, or hopefully. 86% of the people physically thought that they were going to win something that they'd never even gotten past the first day in before. That emotional thing happens for day traders. That emotional thing happens for you guys. It's hard to take the emotions out of it. The only way to reduce the emotions is the amount of money you're playing with. Meaning, if you make $5,000 a month, and your mortgage is $2,200, and your car bill is $600, et cetera, and you net $1,000 from your $5,000, and then you went and gambled $5,000 at a casino, how emotional would you be in one session gambling $5,000 when that's your normal monthly income? I mean, I can't even jump that high. It would be through the roof. Every single hand, you would be shaking. Every single hand, you would be analyzing and sweating every single part of it, because you're risking your entire monthly income, your gross monthly income, on that table. Now, if I said, go play with $500 and make $25 bets, you would make much better decisions. In the scenario where you were playing with $5,000 and you were making $1,000 bets, and then you were dealt a 15 where you're supposed to hit versus the dealer's 10, you would make an irrational decision because you're betting 20% of your 5,000 in one hand. You're going to make the wrong decision because you're having a feeling. Or because you don't want to risk losing it, even though you know the right answer is to hit. For day trading, it's the exact same thing. If you know that the right answer is to sell at this moment, even though it could go up, but you hold on based on a feeling instead of what you've actually analyzed after learning from guys like Ty. If you're gambling with emotion, you physically can't win over time. Because the market doesn't care about your emotion. The casino doesn't care about your emotion. And most importantly, the math doesn't care about your emotion. Every time you have a 15 versus a dealer's 10, you're supposed to hit. Whether you have 1 unit in front of you or 30 units in front of you, the math is the same. The only way to change that emotion for you, if you're not going to be like the most stern person that doesn't care about money, like Phil Ivey, the professional poker player, and you don't care about the emotion. The only way to do that and to reduce the emotion instead of remove it, because you're going to have emotion, is just to reduce the amount that you're trading with. Reduce the amount that you're investing into the market. If you buy a house or you buy a business, the problem for most people when they open up a restaurant is they are completely all in. Over 90% of restaurants fail for one reason and one reason only. They run out of money. You know why they run out of money? Because a restaurant is an emotional business. It is irrational to open a restaurant when the margins are 11 to 13%. Most people open a restaurant out of love, passion, and the idea that they're going to make it and beat the odds when 9 out of 10 of those fail. The other part that's emotional is when you open up a restaurant, you do things over the top that you shouldn't. You buy the fanciest couch, you get the fanciest flat screen TV, and you went there and you thought it was going to cost you 160 grand to open up that restaurant, and it cost you 214,000. And now you're 54,000 behind, and you're doggy paddling every single month, trying to catch up that 54,000, and then the light goes out, the sewer bill comes in, you didn't know there was a sewer bill in your state, and then the electricity went out, and then there was a rainstorm, nobody came in for 3 weeks. And now you're 54,000 behind, you're actually 75,000 behind, and you're gone. The same thing happens in the crypto space when you're investing. If you don't have the rainy day fund when it rains for 3 weeks outside the restaurant, meaning it's a sea of red in crypto, if you don't have the rainy day fund and you run out of chips or you run out of money, your restaurant closes or your trading account closes because you have no more chips. So the only way to do that is you're supposed to be making smaller bets. You're never supposed to be all in the crypto space. You're never supposed to be all in the stock market. I firmly believe Amazon and Facebook are going to take over the world. I'm not going to put all of my money into Amazon, Facebook. There's certain things that I think are going to happen with 99% assurity. I don't want to say 100%, even though I feel like there might be 100%. I feel like certain companies just are destined to take over the world. But I still, even as a gambler, would never put all my chips into just Amazon or just Facebook, etc. So the whole moral of the entire story, and I'll end with this. The idea is for you to be investing into the space, for you to get friends investing in the space, but not tens of thousands of dollars. It's literally getting your brother and your mom and your friend to buy $20 or $10, buy it for them. It's just getting people involved in the space because over time, the snowball continues to grow. And if that happens, it's good for everybody. Thank you guys.